What's up, everybody? Welcome to another episode of the Stock Bros podcast. My name is Tony. Today, we're going to talk about taxes on cryptocurrencies. And this is an important one that a lot of people don't understand. So before we do that, please remember to subscribe, leave a like, leave a comment, and don't forget to check out my links in the description below. I started my own course on Udemy called Financial Literacy and Investing 101 to help you learn the ABCs of investing, understand stock market terminology, and come up with a game plan to get started. And you can also check out my links for public if you need access for fractional shares, or Acorns, an app that pretty much does everything for you. You just add the money and it invests into the market for you. So let's get started with crypto taxes. So there's a lot of confusion about taxes when it comes to crypto sales. There are so many different sources to find information, but I decided to go directly to the IRS website. I found some very interesting information that I honestly had no idea about. So I knew right away that I needed to share this information with everybody. So number one, the first thing you should know is that the IRS considers crypto a property, not a currency. And the US government doesn't recognize crypto as an official currency. In fact, no country in the world has crypto as an official currency yet. And what this means is crypto is taxed with short-term capital gains tax and long-term capital gains tax rates. So if you hold for a year or more before selling or making a purchase, you will pay a lower tax rate. So it works in the same sense as stocks and bonds and all the other securities in the market other than like REITs. You're going to pay a short-term or a long-term capital gains tax. So I know there was a lot of confusion with that. People were wondering if it was a different tax rate. It's not. It's the same as stocks. So the second thing you need to know, and I honestly never thought of this, and this is really important. If you use your crypto to purchase a good or a service, you will have to track that because now you're going to owe capital gains tax. The IRS considers a purchase of a good or a service as a sale of your crypto. So capital gains tax kicks in. So a lot of people think, oh, I'll just move my money to crypto or Bitcoin and I'll just make purchases with Bitcoin and I can avoid taxes. Actually, you're going to be paying more taxes because now when you when you go to buy something with that cryptocurrency, it kicks in capital gains. So any profits that you have are going to be taxed. As an example, let's say you bought $100 worth of any crypto and it grew in value to $200. So you're up $100 in unrealized profits. Unrealized profits are profits you have, but you haven't sold anything yet. If you use your crypto to buy $200 worth of groceries, you'd owe capital gains tax on your $100 profit you just made, because now you use those profits to make a purchase. And the thing about this is, even though it seems that you spent your crypto on something other than selling it, the IRS considers this the same thing. So just because you spent your crypto, you bought something with it, or you exchanged a service with it, doesn't matter. The IRS still recognizes that as a sale, and they tax you. So if you are someone that is taxed at a capital gains rate of 20% on profits, those groceries that you just bought are going to cost you an extra 20% because you used your crypto to buy them. So this is a really crazy thing that I didn't even know about until I researched this. I had no idea that if you were to buy something with Bitcoin, that you are now responsible for paying capital gains tax because it's treated as property. So keep that in mind. If you're going to go buy some Dallas Mavericks tickets with your Dogecoin and you're up thousands of dollars of profit in your Dogecoin, or even just any type of profits in your Dogecoin, and you go buy a Dallas Mavericks ticket with it, Well, now you have to pay capital gains tax as well as the ticket price. So that's something to consider, and that's something that a lot of people didn't know. So it's not as much of a utility as you thought crypto would be, or as much as I thought it would be. And a lot of people are saying, oh, it's a worldwide currency. It's used for so many different things now. Dogecoin is being accepted in more different places, in all currencies, not just Dogecoin. But I'm just giving an example. Oh, it's accepted you can buy Dallas Mavericks merchandise or tickets. Well, when you do that, you now have to pay capital gains tax. And the government does this so that people don't use this as a way around paying any tax on profits. So here's the third thing you need to know about crypto taxes. If you receive crypto as a form of payment for work, you will have to pay ordinary income tax on it. So that's something to keep in mind. And number 4, you can write off losses on crypto the same way you would on stocks. So a lot of people asked about that. You can write up to $3,000 in losses per year. Now, this doesn't mean that you get $3,000 back if you lose $3,000 worth of crypto. It means that it will lower your taxable income by $3,000. Number 5, your crypto exchange should provide you with the form at the end of the year to make it really easy for you to file taxes. It'll have all the information of all your trades and purchases, but you should still track all your purchases as well because, like I said before, when you make a purchase, you may owe capital gains tax depending on if you have profits. So my final take is the IRS commissioner said that this year he estimated the U.S. failed to collect as much as $1 trillion in taxes owed, and a large part of that was because of the explosion of popularity and use of cryptocurrencies, which are more difficult for the agency to track and tax. Now, you have to be very careful because the IRS has stated they're ramping up their cryptocurrency division to track down people that are evading taxes, and they will be more strictly enforcing cryptocurrency taxes. So you should really make sure that you do your due diligence when tracking your taxes and make sure that you are reporting the correct numbers and not intentionally leaving out anything because they could come after you and the fines are harsh. So you want to try to avoid that. So that summarizes taxes on cryptocurrencies. Hopefully that helps clarify things that you may not have known. For instance, I had no idea if you buy something with your crypto, you now have to pay capital gains tax. So that's a pretty surprising fact that kind of changes things a little bit for me. I don't know if I would consider buying anything with crypto now other than just buying crypto and converting it back to fiat money for profits. So let me know your take on this and what you think. And also, like I said before, check out my links in the description before for my course. Check out my other links for referrals to help you get started with investing. And I appreciate your support. Thanks for watching. Until next time, take care.